Yeah, the late slide in U.S. equities yesterday was pretty stark. There really wasn't any specific catalyst for the equity market slide, but it's now taken the S&P 500 into negative territory year to date for 2025. And even in just the last week, the S&P 500 benchmark has now slid over 4%. Yes, yesterday there was a lot of tariff threats from Trump. He added that new one in on China, but there also was weakness in the tech sector from the follow through from Nvidia. Nvidia stock slumped 8.5%, was its worst session since the DeepSeek episode.
Very hard to say.
DeepSeek episode.
Okay, we got it.
January. And if you look at how the Magnificent Seven has traded so far this year, it's not so magnificent, Caroline. 6 of the 7 stocks are in the red. The only one outlier is Meta in that group of 7. It's really the follow through from Asia was quite notable as well. You had the Nikkei and the Kospi in South Korea. That was a 3 standard deviation move to the downside. So something we don't often see as those equity markets slumped. We did also have some retaliation or verbal warning of retaliation coming from China. So the risk is that this new threat of a 10% tariff on China on March 4th is really risking some retaliation, some tit for tat action between China and the U.S. and the whole Asia complex really felt it this morning.
Are we at the point, Val, where the thesis that the markets are a guardrail on Trump's based instincts around tariffs kick in to gear? He does not like seeing a market rout. This is what we are on the precipice of, if we're not already in the early stages, in the early innings. That theory is going to be put to the test in the next few days.
Yeah, well, at least he's getting lower Treasury yields, but probably for the wrong reason, right? The chat has been that maybe his eye isn't on the equity market. It's on U.S. 10-year yields, which have dropped some 40 basis points just in the last few weeks, but not for reasons he's probably wanted. That was a lot on sour economic data out of the U.S. recently. But I think Trump is way more concerned about getting what he wants out of these tariff negotiations, given it's next Tuesday is the next deadline for Mexico, Canada, and now China. I think he is going to be more focused on getting what he wants out of that rather than the immediate equity market reaction. It's been really hard for financial markets to price in these tariff negotiations, and we're getting a feel of what happened last time on the Mexico-Canada tariff negotiation, where we really didn't price it in until almost last minute. So we're feeling that kind of repercussions from that now. It seems like no one is really wanting to hold on to risk into this weekend. And we have to also note that before the weekend, we get U.S. inflation data, the Fed's preferred measure of inflation, PCE, out at 1:30 UK time. It is expected to tick up from December. January is expected to rise to 0.3%. The risk is there's any signal, any little whiff of a hot print in this, it could further shake up the equity market as we head into a long weekend of supposedly some tariff negotiations and some new headlines out of the administration.